The Nasdaq closed out the first 6 months of this year up 32%. That's the best first half for the tech-heavy index since 1983, when it rose 37%. Now, this rise was largely fueled by big tech stocks such as Meta, up 140%, Nvidia, up 190%, and Apple, which recently hit $3 trillion in market cap, the first company in history to do so. The Nasdaq is riding multiple tailwinds. For one, it's coming off the back of a massive drawdown in 2022, which saw the index lose a third of its value. It's also benefiting from widespread cost-cutting measures in the tech industry. We've seen mass layoffs, for example, at Google, Meta, and Amazon, among others. And of course, there's the AI wave, which has re-injected speculation and optimism back into the market. But Scott, in your view, what's been the biggest driver of this year's bull market?
Well, they say markets climb a wall of worry, and we've been a month away from this recession for 18 months, and the recession just never showed up. But at the same time, it provided big tech companies cloud cover to cut costs. And these were companies that had grown their expense line for 20 years, and then given the chance and the opportunity to lay off 10, 20, or in the case of Twitter, 80% of their workforce. And the majority of their costs are people.
Yeah.
It's not plant, property, and equipment. So almost all of this cost just flowed straight to the bottom line. So this year of efficiency, as Zuckerberg called it, has really been the theme across a lot of internet stocks. And we said at the beginning of the year that our prediction was Q4, you would see these companies, their revenue growth would be good, not great, but they would have their most profitable quarters in history. And this entire generation, or this entire management philosophy in the 80s was called re-engineering. And basically from 1945 on, we had a monopoly on the global economy. We took the two most productive cultures in the world, Germany and Japan, and we just leveled them. So we had a monopoly on everything from cars to pharmaceuticals to fertilizers. And as a result, every company just kept hiring more people and pushing into more markets and making more money. And then the Germans and the Japanese caught up, and then the Brazilians wanted in on the game, and then China started to rise. And all of a sudden, companies found that there was fat everywhere. And the big trend in re-engineering in the 80s was anyone with the term vice president or senior vice president, fire them. And the next day, your consumer and your shareholders won't know that they're gone. And that's kind of what happened here. So these companies are in fighting shape, and the economy is actually much stronger than anyone anticipated. And then the chaser, Ed, for all of this is the greed glands and the animal spirits inspired by AI. And as a few stocks go, there goes the Nasdaq. Nvidia's up. Nvidia's tripled this year. Meta's up 145%, Tesla 129%, Apple, Amazon, and Google are all up 40% year to date. So when you have companies, I think Apple's 5% of the Nasdaq or something like that. So when these companies are performing this strongly, it means the Nasdaq is up. So what do we have here? We had the wall of worry that the market was climbing, a lot of money on the sidelines. The recession never showed up, but they absolutely got in fighting shape and cut all of these expenses, which flowed straight to the bottom line. And then the animal spirits came back, and probably more people buying on margin, more retail investors coming back in, which is to set the markets on fire. But there's no getting around it. The best first half in, 40 years for the Nasdaq? That's striking. And now what does that mean? And that means the back half of the year is going to be the best back half in a long time for IPOs. So we're setting up a flurry of new issuances. We're setting up a flurry of investment banking activity. And by the way, investment banking activity has been just dormant for the last 12 or 18 months. So what's interesting is not only what happened, when the first half of the year is the best in 40, but what that means for the last half of the year.
Yeah. I mentioned the phrase bull market, which, around 60% of investors would say that we are in a bull market right now. And then we had this historic Nasdaq rally. But you also mentioned the weighting of those tech stocks. So if you look at Microsoft, Apple, Google, Amazon, Nvidia, Meta, Tesla, they make up 50% of the total weight of the Nasdaq. And Microsoft and Apple alone are a quarter of the Nasdaq's market cap. And then, so I look at what's happened to the Nasdaq, and then you compare it to the S&P 500, which is up 15% in the first half of this year, which is pretty good. But then you compare it to the Russell 2000, which is the 2000 next biggest US companies, and that's only up 7%. So it sort of feels like this is purely a big tech rally that's happening right now. But a lot of people are describing it as an overall bull market. Do you think that we have officially entered a bull market, or is this just a bear market rally that's being buoyed by the big tech companies?
Well, a couple of things. Size matters. These companies just sort of dictate what. I mean, keep in mind, Apple is bigger now than the entire UK stock market, just one stock. So these companies are so big, and these are indices, meaning they're weighted. So when Apple goes up 20%, that probably means the entire Nasdaq is up 2%. Now, also, it's your entry point. So Nasdaq shed a third of its value in 2022, which means just to get back to where it was in its highs of 2021, it needs to go up 50%. So it going up 50% just means it's back to 2021. So it's bouncing off of lows, if you will. And then again, 150,000 workers laid off, pretty high cost employees. I bet that's probably 30 billion in annual revenues, money saved. That doesn't appear to have hindered or slowed growth, and it's all dropped to the bottom line. So this is sort of the perfect storm of good things for the market. The key question is, where do we go from here? You have Apple trading at 29 times earnings. It peaked at 35. Its earnings have gone up, so it's come back to a multiple 29, but its 10-year average, I think, is around 17 or 18. So will we see a bit of a reversion to the mean? Or are we off to the races again with a few high-profile, AI-driven crazy stocks like NVIDIA or, Tesla's just on a tear? Are we going to see some IPOs that light up the market? In other words, are we back to the go-go days? And I would argue that for the next 6 months, whether we are or we aren't, it's going to feel that way because the market has decided. The market feels like it's got permission again to head to the men's room and do some rails. It's like, okay, it's fucking party time.
Yeah.
Let's lever up. Let's buy some margin. We don't want to miss out. And the animal spirits are back.
Yeah, I just want to bring it back to small cap companies that I mentioned in the Russell 2000 index. So if you look at the Nasdaq, the average price to earnings ratio across the Nasdaq 100 is 31 times right now, and a year ago it was 25 times. So it's a 25% increase. And if you look at the Russell 2000, the average PE ratio is 27, and a year ago it was 46. So that's a 40% decrease from a year ago. And basically what it feels like is all of this momentum that was in small cap stocks has basically just been stolen and injected into the top 100, mostly tech companies. And I'm wondering, from your perspective, it feels like we are returning to this big tech era. Do you think that this is overall a good thing for the markets? I mean, it's probably a good thing for investors. Investors are feeling more optimistic now, but it also means that the power and the wealth is getting concentrated into a smaller number of companies at the top. So how do you feel about that switch?
Yeah, I think that's the correct question and an astute observation, and that is, it's good for the markets if you're just invested in index funds, because these index funds are dominated by these big players, and the big players are way up. You're probably feeling pretty good about your 401k now. The problem is the ecosystem healthy? And that is, in an ecosystem, you need a diversity of species. And it's just, I've been watching all of these nature shows, and there are more birds in captivity now than there are birds in the wild because of chickens, because we have so many chickens being raised and then slaughtered for, our chicken gyros. And there's I think the human mass, or the mass of humans and their pets, now surpasses or is greater than the entire mass of every mammal on the planet. I mean, there really is an extinction taking place. And I look at basically the big tech companies, and they're the apex predators. And small companies, the ecosystem, they try to bubble up, they try to survive. But, this is really a segue to our next story. There's nothing like the bundling power and the capital and the brand equity of an Apple or a Meta, or, the good money is always on the big tech incumbent right now. So the opportunity to ever buy into kind of big tech at what looks like a reasonable multiple is just that. It's an opportunity.